Good afternoon, traders, and welcome to this week's Midweek Market Focus. My name is Nishal Patel, and I'm going to be taking you through the markets for this week. Now, there's a few key things that we should be discussing first. The first thing is the discussion in regards to cable. Now, GBP, everyone's looking at GBP right now, and the result of tomorrow's decision in terms of the independence of Scotland and what it means to obviously our local economy here in England, and most importantly, what happens to the British pound going forward. Now, in all honesty, a number of variables come into play, and they all factor in. But where it's going to go, pretty much, is anyone's guess, because it can only, realistically, it's only going to spike in response to that, and also credibility on the English market and what it thinks of it. Obviously, there are some big perks on the independence of Scotland. It should really do very good things for GBP and the pound. If they don't, then again, what has changed? Not a lot. So, what would you expect it to change? Well, you wouldn't really, but realistically, even traders are quite baffled right now of how it's going to go, and that's complete. I would say that would be absolute honest. A lot of people have opinions of what will happen, but will they put their money on it? Probably not. What I would tell you is there are some huge announcements coming out anyway over the course of today. We have a big FOMC announcement on the USD later on this evening, so around 7 p.m. GMT. That's obviously going to have an effect. So by the time you guys are watching this video, or the FOMC announcement has either just happened or is ongoing. Now, the cable is on this very, very, very deep what was pullback, and everyone was looking for a pullback in and around this time, but it has just carried on plummeting, and it's still going. Now it's been going so long that we are pretty much in the remit where this is virtually a trend. It's been trending down, and we can use that word now. It's been trending down for virtually 3 months. As it's been shorting for 3 months, then realistically it creates a new trend for us, and that's what we should be focusing on. Obviously, what we should always be looking at is a slightly larger time frame, and the largest time frame tells me it's trending down. It's only last week where we had literally it clipped the 200 moving average on the weekly time frame, and literally has just bounced back up. But right now, as it stands, this is a downtrend. So I want you guys to be aware of that. There are obviously some very good trades kicking about. The one that I would still turn to as a classic example of a very, very good trade is the Euro Aussie. It's been trending down for a very, very long time now. We have a look here on this weekly time frame from the start of 2014, pretty much all 9 months. We are in this very steady and beautiful downtrend. We have clear regression channels that it's abided by, and it's sticking to. And even on a slightly larger time frame, slightly smaller time frame, just flicking over to the daily time frame here. Price action has literally just come off a moving average here, and literally just sunk straight down off this high test bar a couple of days ago. For those people that were looking to get in on an income generator, unfortunately this probably wouldn't have kicked up as a short trigger, purely for the fact that this pullback here was quite quick and snappy, so that means that 5 moving average would have crossed through that 20, so your software probably be running as a long position. I'm just going to check that for you right now. Let's just put that on it there, like so, and there it is. We can see the 5 has crossed up through the 20 moving average, so the software's thinking it should be going long. But what we're really looking for, and those guys that are just using income generators, I would tell you just to make sure that you wait for a clear signal, and your signal on the income generator is only going to come once it's pulled down and then started pull back up again, and then you should be taking a short position at this point here. So wait for that if you're an income generator specialist. If you are a power pivot trader, a must trader, then this would be a nice, clean, and easy entry for you. You are pretty much just in the minus right now after breaking clean profit off the back of yesterday. Most of this move short yesterday actually happened yesterday evening. I think it was closer to, and we're just going to have a quick check that, closer to the Australasian Open. And if we just have a look at this 4-hourly time frame here, we can see that the biggest movement really for us happened later on in the day, and it's just really pushed down just after the European close, and going into the Australasian Open. And that's when the biggest movement happened. It's on a slight pullback right now, which is something we'd probably expect. But again, with what's happening, I would expect this to carry on going short. But as I said, there are some key announcements going on today on the USD. So that should have a bearing. Obviously, we've had a announcement already this morning on cable. So a week full of key announcements. So that would be my trade of the week. Now going into strategy and uses of strategy. Now obviously we've had a lot of new people come in and join the program recently. So I just want to go over one of the strategies. The strategy I'm going to choose today, in fact, is an income generator, as we're already on it, and as we're using, as I'm looking at the Australian dollar right here, I would suggest the best thing to do is use this. Now, guys, remember that it's very important that the first thing you do is take it systematically and go through trend first. And trend's the very first thing you should be looking at. Now, as we look at this, we can clearly see that it's been trending for 3 months. Even if I didn't have a look at the whole of this year, I can clearly see from June, July, August, September, it's been trending very cleanly for 3 months, where I've got clean succession of lower lows and lower highs. There has been some areas where it's pulled back slightly deeper, but again, we should appreciate that off a slightly larger time frame. Now, as I've understood it, it's trending. The next thing I'm going to do is look at my moving averages and depict direction. I've got a number of moving averages on this particular chart that I'm using today. I've got the 200, I've got the 150, and the 20. All I'm going to concentrate on is the 200, 100, and the 50. I can see the 200 is above the 100, 100 is above the 50. As I've got those three moving averages in perfect unison, they tell me to go for a short position. So that's all I should be doing, is looking short and short only. And that's what that's the only trade I'm going to be looking for. The next thing I'm going to look to do is to make sure that price action is in the relevant envelope. Now, these envelopes are built around a mean price, and the mean price is, as I was speaking about earlier, is this middle line here. Okay, so this middle line here is actually the 5 moving average. We're going to outline that as a mean price or an average price. Price action always reverts back to or in and around. Obviously, it's calculated off the last 5 days. In this case, is a daily time frame, and then we've got envelopes around that are off that mean price. So we've got plus 0.6% of that mean price, and then plus 1.2% of that mean price. And then I've got minus 0.6% and minus 1.2%. Now, if I'm looking short, I must make sure that price action is above the mean price, so above that 5 moving average, or that middle line here. And if it's above there, then I know it's in the perfect place for me to take an income generator short. If it was down here, for example, in the lowest two, as we've got here, it's in the first lowest band. If I was looking to take it short here, realistically, it really doesn't have much room to go, and as it's already moved in that direction after a phase 1, I would always expect a phase 2. So it's very, very important that you ensure that price action is in the relevant envelope. Now, always remember, guys, that it's also very important that when to understand the start of a phase 1, we should always look for the end of the phase 2, and a key element is looking for key levels of support and resistance. Now, I'm just going to draw a level of support and resistance across the high of that bar a couple of days ago. I'm going to show you what I mean. Now, what I'm looking for are 3 clean touches. I've got one for that day. I've got a second one here, and if I carry on further down, I'm bound to have a third one. And all I'm looking for are 3 clean touches. As I've got 1, 2. I'm just going to carry on filtering down through this, and I know I'm going to find a third because I've checked it myself. And I'm going to let you guys do that because there are three easy touches for that level. Now I know there is a level of support resistance there. Effectively, what I can do is I can start planning or preempting my phase 1. So I've got a clean phase 2 there. It's tested the level support resistance, so what I should be looking for, and it's also in my highest 2 envelopes, so what I should be looking for is the start of phase 1. Now, obviously, for us, it's a reversal bar as well. That only builds into the strength of that particular trade. So if I've got a reversal bar, be it a high test bar that is depicted here, an inside bar, or any other form of reversal bar, including a engulfing or a key reversal bar, then that would be ideal. So once I've got a reversal bar as well, it just builds into the strength and the quality of this income generator, because in some cases you're going to have 3, 4, 5 trades, triggers coming up at one time. It's down to yourself as a discretional trader to pick out the best quality trade. So that's what you must do. Once you've picked up the best quality trade, then or a number of good quality income generator trades, then you're only gonna trade maybe 2, maybe maximum 3 of them. You wouldn't trade all 5 or 6 of them, because you probably want to find better quality ones, because an income generator is bound to run. It's bound to run some days. And ideally you want to allow yourself to run it for days. So the best thing to do is just pick out quality ones, because the reality is you may find a good quality income generator trade or any other quality trade a few days later. In that case, your overall exposure on your account shouldn't be too large where you're running 20 odd trades. I would say, as a rule of thumb, never hold more than 10 positions, and that's a serious amount of trades to be holding, because then effectively at any given one moment, if you've got 10 trades open, the maximum exposure that you have onto the market in those particular conditions is 10%, and should be 10%. It shouldn't be any more than that. So going back to this income generator, as I was saying, is we've got this high test bar. So what I should be looking to do is put an entry point below the low of that, stop loss above the high of that, plus 100 points. Now, unfortunately, with the strategy, the way it's laid out, the fact this 5 is crossed up through a 20, I can't actually place an income generator here. But what I'm going to do is I'm going to take you back to a good quality income generator that's in the right zone, and also in the right condition. So I'm just trying to find you a very good income generator. There's a few good ones that have worked. There's many of them. There's one there that's worked quite well. It comes against you slightly after putting you into profit, and then really runs on into really solid profit, and we can see that you've hit full profit target only some days later. So that's one. And then you've got another one further up here. If we just have a look here, and there it is here. It's off. It's closing price is above the midpoint here. I've had a phase 2 pullback. It looks like it's low testing, but is it at the end of a phase or at the start of a phase? This is at the start of a phase, because my phase 2 is finished and my phase 1 is starting. As my phase 1 starts, realistically, remember, reversal bars, they work best at the end of a phase, not mid-phase. Okay, when it's mid-phase, it doesn't influence the entire phase. So that's a good one. Remember, guys, that an income generator signal will only come. So if I'm looking for a short, then I will only get a trigger off a green bar. Okay, as long as this middle 5 moving average is below the 20 moving average. I will only get a long trigger if it's a red bar, because the software is just looking for a pullback, and it just looks at if it's a buyer bar or a seller bar, a bearish bar or a bullish bar, to understand if it's worthwhile triggering, and then it will just basically trigger. So guys, hopefully this midweek market focus has helped you. And as always, I'll welcome any questions that you might have. Until next time, guys. Bye-bye.